Hello everyone, this is the second in a series of instructional videos for the finance section of AstroApp.com. This is Bill Meridian speaking to you from Vienna, Austria. I operate Cycles Research Investments, LLC, rated the #1 stock market timer by Timer Digest in 2016, and also brought to you by Gene Vicotan, creator of AstroApp.com, the most comprehensive astrology website in existence, with all sorts of tools that you need to explore many areas of astrology, some of them quite arcane and unknown. We are going to look at this will be our second look at the finance module, and as I mentioned in the earlier reports, the very first thing you want to do before you begin any of your inquiries is to turn on New Astro Scribe, and we'll minimize that. The Astro Scribe, as I mentioned the first time around, will enable you to save any of the studies that you do during your AstroApp session. There will be a little button somewhere on the screen, usually down at the bottom, that will say Append to Astro Scribe. So the first thing we do is we turn that on. And now we will go to the finance section, and we're going to look at this module today, Research, which has three areas: criteria, research, and results. And as a brief outline, criteria enables you to select the planetary combinations that you wish to look at: transit to transit or transit to natal. Research will enable you to run that cycle that you've computed. Once you choose the parameters and run the cycle, you save it under criteria and you can call it up with research, the next tab down. So it's criteria and then it's research. Research will enable you to run, let's just say, Jupiter-Uranus cycle versus any price series that you may pull up, whether it be the NASDAQ, the Dow, an individual stock. This is the area where you will do that. And the third one, results, is for transit to transit only. You can store them down there. So let's go to criteria first. And the first thing you have to decide is what you're actually doing. So here you have transit to transit, or you can switch. This should actually be transit to natal, but you get the idea. Transit to natal, transit to transit, transit to house cusps, stations in longitude, stations in latitude. Of course, most of your studies are probably going to be here, transit to natal, and let me go over here to points. And let's say you wanted to select Sun, and then we go to transit down here, and let's just say Jupiter. So now what you have set up here is it's natal to transit, so it is transiting Jupiter to the Sun. Transiting Jupiter to the Sun, you have to name it up here. So we might call it Transit Jupiter to Sun. It will prompt you. If you forget to name it, you will be prompted to name it. Now, what aspects would you like to see? All, dexter, sinister. So that would be applying all, or applying only, separating only. And there are the aspects. So if we picked conjunction, and if I hit save and close, that will be computed. So now let's open up research again and go to research. Now these are all studies that I've already done. Those are, for example, right here we've got, well, sun to sun is simply the solar return. That's when the transiting sun goes over the sun. You have to select a horoscope for that. And we'll be looking at first trade charts. Or if you want to know what happens when Mercury goes over Jupiter, you've got that right here. Or Mars to Jupiter right here. Or transiting Venus conjunct. These are all conjunctions, by the way. You notice my notation, the 0 is the conjunction. So you can just get a bit familiar with that. And you can see we can pull the slider down. And there's transiting Jupiter to Sun, which is the one we just did. So just to give you a taste of how this works, I'm going to pull. Now I have to select, you press left mouse, and I pull it. Oh, I got to select a chart first. So we're going to select Apple. And Apple is in the USA market. We're not working with a portfolio. And I'm going to say duration, well, I'll use 20 years, although I have about 38 years worth of data. So now it should pull over quite easily. So now we're set up to look at Apple Computer, 20 years worth of prices, sun to sun. In other words, during the solar return, how does the share price move? Now, this requires a bit of explanation. Maximum trading days offset. The way I've set it up, if the aspect occurs in a weekend, it will not be counted. But I want it to be included on a weekend. So I'm going to set this to 2 days. So that means if the aspect occurs on Saturday, it will be displaced. It'll take Monday's price reading. If it is on Sunday, it is going to take Monday's price reading. If I get it to 3 days, that would be for a 3-day weekend. And the reason I'm explaining this is because I intentionally selected sun to sun, because if you select 20 years and the natal sun is transited by the transiting sun once a year, you should have 20 transits. If you don't, it's probably because it occurred on a weekend, and unless you use this tool, max trading days offset, then you won't pick it up, and you'll have, let's say, 20 years worth of data and say, hey, wait a minute, I only got 17 or 16 or 18 transits. That's how you can handle that. And so I'll explain the other two in just a minute. So I can hit process, and we will now generate some results. So now let me explain what you're looking at right here. OPE right here, that is the 0 price. That is the sun conjunct the sun. And over the last 20 years, the price has tended to decline. Now over here it's 3%. So 3% decline into, well, it's actually almost 3,21012. That's about a 5% decline, which actually is quite a bit, but this is a volatile stock. And you'll notice that on average, about 1 week after the solar transit, the price rises. And it rises from minus 2%, you can see that here on the left axis, to plus 6. That's an 8% move. That is very good. Now, let me explain a little further. Up here, there's not enough room to make these numbers readable, so it's been put on a slider. So up here, I can save this by hitting this button. See where it lit up and says save. Ticker, we know that it's Apple Computer. Portfolio, we're not using that right now. We're not using the rating. There's the criteria, sun to sun. Now, let me explain that this is 29 days before, 28 days before, 27, but so you could see all of this, it is not, it has been displaced over to one side, but I can change that using the slider. And you see what I'm doing right now. I'm looking for D0, that is day 0, and I'm going to line day 0 right here up with this right here. Now, one more smidgen over, and I think I've got it. It's approximately correct. That is day 0. So the change from day 0 is obviously 0. Now, one day later, you're at day 1. Now, 4 times up, 13 times down. That means somewhere in here we lost 3 transits, probably due to 3-day weekends. Remember, I mentioned that on the previous screen. And let's go now to day 2. Up 4, down 12. And notice down here, we're going to come to day 7. Let's go right at 5, 6, 7. Now, we go on day 6, up 6 times, down 6 times, 5, 6, and we go out here 8, 8, and now 9, 9, as we start 10, 10, 11, 11. Notice it's up 11 times, down 11 times, yet the graph is up. What this tells us right away is that there have been several in these 11 up days. There were some very big price moves up, and when the market actually was down, the 9 times it was down, there was not much of a decline. So the balance, or the expected return, in other words, the magnitude of the 11 up days was much greater than the magnitude of the 9 down days, which is why the graph is going up. 12, 11, 13, 11. Let's go all the way out here to 20. 11, 8. So we go out here. Well, that's not 12 up, 8 down. It's not a big sample. It's not a great number. So that's how to read those numbers. Now let me explain to you what AER is. Okay. AER is annualized expected return. And if you want to pull out a pad, you may want to make a note that if, let me say, you're up, down, up and down 10 times. So obviously it's a 50-50 coin toss 10 days after the sun is conjunct the sun in the horoscope of Apple. Not very good. But if you take the magnitude of the up moves, let's say the up moves are, I'll make something up, 2%. Well, let me make that 2%. Yeah, okay. And if it only does that half the time, you get the expected return by multiplying the 2% price move times the 50% probability, 10 divided by 20. So half of 2% would be 1. And that number is then taken and annualized. In other words, if this condition persisted for the entire year, you would wind up with 6.83. So these, by the way, are not very high probability odds. 10 times up, 10 times down. Average expected return annualized is only 6.83%. That's not very good. It is measured from day 0. Whenever you click on that blue tab, all those numbers are calculated from day 0, which is right above sun, 0 sun, that little red square down here at the bottom, and the 0 price right here, and the day 0 up here. So it's saying if you went short, you would wind up with an AER of 5.1. That's the annualized return. Again, this is not a great example. If you now note, let me run out here. Now note, as we get further out here, 22 days, 12 times up, 8 times down. We lost 2 days due to 3-day weekends, most likely. And the average expected return is 30.18 from being long and 5.1 from being short. So obviously it pays to be long. Well, you can see that in the graph. Look at that. You can see that in the graph. I could actually go out a little further, out to day 30. Now, here we get the full 13 times up, 7 times down. Remember, it's 20 years. I could have chosen back to 1980, which would be 38 years. And you'll notice that the long strategy is vastly preferred over the short strategy. This just quantifies what you're seeing in the red line. Obviously, you can see that from the red line. And why do I like average expected return or annualized expected return? Well, if you have an indicator that is right, let's say 80% of the time, and that's 80% of the time over 6 months, and the percentage is, let's say 10%. Well, 80% times 10% would be 8%, but you only get that for half, you get that in half a year. So by annualizing it, you can compare any time period. If something is up, well, I'll pick something ridiculous. If it's up 1% every day with 100% accuracy, or if there are 365 days in a year, well, if I could find that indicator, I'm going to keep it to myself. That's 365% every year. That you're not going to find. If it were up 0.5% every day and there are 365 days, assuming I'm using calendar years, if it's up 0.5%, it would be half that amount. If it only happens 10% of the time, you would multiply those results by 10%. So this way, if you have an indicator that gives you transiting planet to natal planet, and it only runs 20 days, by computing the annualized expected return, you can compare that to something that runs 7 months, 7 days. So it's a way of normalizing the results you're seeing, that red line. It's a way of normalizing them so they become comparable. You're adjusting for the percentage of time it's up or down, essentially up. So if something is up 10%, but it only does that 30% of the time, you multiply 0.3 times 10%, and what do you come up with? 3%. And let's just say, well, it happens every week. Well, if there are 52 weeks in a year, that's 156%. That's pretty good. But if it only happens once every 6 months, that's 1.5%. Well, let me see if I have that right again. Let me. Well, you get the idea. If something appreciates 10% in a year, it only happens 50% of the time, the average expected return is 5%. So a high AER is good, and it makes it comparable. So if I ran, for example, transiting, let's just say transiting Mercury going over Jupiter in the same chart, and I wanted to find out which one was the stronger, I could then, if I had let's say in the other study, if that also ran up right in that time period from day 19 to 21, I'd say, well, hey, I really have something here. But if it ran down, it might negate this up move that we said. So, and here you see appended to AstroScribe. Well, you may not be able to see it. Let me just raise this a little bit. Appended to AstroScribe. If you click that, you will save this study. So let me go back now to the previous screen. And now, see, I can set that. I explained to you what this maximum trading days offset is. Let me explain the other two. If I decide I want to rerun that study, but I don't want the 0 point, all the calculations are made from day 0. What is day 0? Well, it's the day of Sun conjunct Sun. If you want to offset that, however, if you see that the stock tends to bottom, let's say 3 days later, you can adjust that right here. You can add 3 days. Well, not 16. You can add 3 days here, or you can leave it at 0. Or you can offset in degrees. So now if I wanted to get that out of the box, I would just click the X. And here we have transiting Mercury going over Jupiter. Let's pull that one over there. I'm going to expand this to 30 years. and I'm going to process transiting Mercury going over the Jupiter in the horoscope of Apple. I have no idea what we're going to find. And here again, we will find, let me adjust the slider. We find here we can save by clicking on that icon. It's Apple, which we know. It's Mercury, Jupiter, which we know. And the highest and lowest points on the graph, it's -7 to +3. These are the highest, lowest points on the graph. Let me line the 0 days up. Now we have day 0, day 0. And obviously day 0, day 2, as we did before. This has got to be Jupiter over Mercury. I think I reversed that. Let me just... That must be Jupiter over Mercury because there are so few of them. Let's say 5. Yes, in 30 years worth of data, Jupiter would make, I was transiting Jupiter to natal Mercury, which you might conclude from plain vanilla astrology would be bullish. Is it really? Well, for Apple Computer, if you start 12 days before up to the day of the conjunction, it seems like the price runs up, and it runs up from -5 up to a little over 0. So we can say it runs up about 5 to 6% prior to the exact conjunction, and then it runs down. So if you think about somebody with Jupiter on their Mercury natally, you would think of someone who's eternally optimistic or perhaps talks too much. So it's saying that the Jupiter on the Mercury tends to be a very short-term top. Now I'm going to explain what these are. This is when you have more than one study up at the same time. So why don't we do that now? Why don't we go back to the prior screen. And let's go back and let's add sun in. So now we got 2. Now we're going to hit process again. Now here we have the sun to sun and transiting Jupiter to Mercury. And we've got the same setup. We are lined up here. And now we can see there are 2 of them. And notice how they negate each other over here? You see that? Here's where, see that little triangle pointing down? You click on it. Now, this enables you to sort these studies. If you had four of them up, 3 of them up, you can sort it ascending versus descending. You can configure your sort. This is when you get into more complex studies, which we're not doing right now. Group by 3. We don't have 3 up there, so we can't do that. But that is what that is for. So let's go back. Let's say done. And I'm going to pull, let's see, something that happens fairly often. Well, transit Mars to natal Jupiter. Natal Neptune. Now, I did a study of all 100 NASDAQ stocks, and I was surprised that Mars transiting over Neptune usually occurs right around a short-term low. Let's add it to Apple and see what we get. Now, here we have, there is the Mars transiting over Neptune, and remember I said it's bullish for, it is bullish for NASDAQ stocks. And here you can see it is the most effective one of the 3 we've pulled up. And you have to remember, I'm dealing with Apple, which has been an enormous winner, so it is no wonder. Apple's been going up since, very powerfully for about over a decade. And so, and of course it had its big period of growth back in the 80s, and I'm including all that data. So if this were Ford, or if this were those charts might be more flat. If it were IBM, they would not have this upward bias. I just picked Apple because I know it's a well-known stock. See, now we can do this We can sort ascending, sort descending, by the way, this enables you to toggle on and off these different markers, these different icons or numbers up at the top of the screen. So let me get rid of that. So right now we can come to the conclusion that a conjunction of transiting Mars to Neptune is the strongest of the three effects we're looking at. That if we see Jupiter conjunct Apple's Mercury, that usually occurs around highs. And the Sun conjunct the Sun is mildly bullish, which is what I have found for most stocks. So let's click Done and go back to the screen. Now, what I have not done here, and this is something you'd want to do for the Standard & Poor's, if the Dow Jones Industrials, the NASDAQ 100, in other words, for a broad average, and that is transit to transit. And there's one right there. That is transiting Mars, Jupiter. That is how transiting Mars, Jupiter, again, 0, I'm doing only conjunctions. 0 is the conjunction point. Here we see 0, we see 0. That is how that synodic cycle, Mars, Jupiter, affects Apple. No natal points were picked. And that can be only transit to transit can be saved into the events box. Let's look at events. Well, first of all, this tells you what you're looking at. This tells you these are the exact days and times of all the Mars-Jupiter conjunctions. So that's a good way to get a look. Here I'll sort them in chronological order for you. You can sort them in different orders. That's done. Now let me just cancel out of that, and I want to go back to finance. And by the way, you can also, I forgot to mention here under events, here you have all the Mars-Jupiter conjunctions. You can export them out to Excel. You see this right here. So, we are now going to click that off. So let me just review. We're going to finance. We're going to research. Criteria, we pick our criteria. If you wanted to look at, let's just say, transiting Moon going over Jupiter, transiting Moon square Jupiter, transiting Mars conjunct the midheaven, this is where you would select it. To actually take the criteria that you have developed and put it together with a time series, whether it be an overall market average or a stock, you would do that here. And results. Now here I have saved Sun, and Jupiter, Mercury. I have saved these. This is with Adobe. Sun going over Sun. And Adobe again. Here, this is Sun, Adobe, and you'll notice that that usually occurs during a downtrend for this particular stock. let me do the other one. Let's pick Mercury, Jupiter. Let's open that up. And that also occurs during a downturn. You've got to remember, you've got to take a look at the stock you're looking at. If you pick something that's been in decline for many years, like the oil and gold stocks, the inflation hedges, were in a bear market from 1980 to about 1999. So if you look at that 20-year period, just about any transit to the first trade chart of any gold or energy stock is going to show up bearish because it's in a long-term bear market. Conversely, as we saw with Apple, in an uptrend, an overall uptrend, if the market is appreciating 10% a year and Apple is going up 15 to 20% a year, well, obviously, all your results will come back bullish. You've got to keep that in mind. But I developed these techniques during the 90s when I was managing a technology portfolio, and I kept that in the back of my head. I would look at such graphs, and I would say to myself, it's true that, let's just say, Jupiter going over Mercury, during the time when they report their earnings, is bullish. And I would say to myself, well, during the 90s, technology has done nothing but go up. So if I tested it through bull and bear markets, I would not get results that are quite this good. So during the bull market, I can expect a good percentage gain, but during a bear market, it's going to be greatly reduced or perhaps not there at all. And I can tell you, using this module, I was able to verify that transiting Saturn going over the Sun is generally bearish. It doesn't necessarily bottom, but it looks like a saucer bottom. And I've tested a large batch of stocks doing this, that the price tends to fall 40 days into the conjunction, and then around that time of the conjunction starts to rise. It is not exact because Saturn's moving very slowly. Because way back in 91, when I was given the big technology portfolio, I had to make a decision. Do I leave IBM in the portfolio or do I take it out? Because we had millions of shares of digital and IBM bought at prices twice as high. The first trade chart and incorporation chart both have their sun in Aquarius. Saturn transited right over it. I turned on the television, and BBC is suggesting that IBM is going to go bankrupt, which is not possible if your cash flow is positive. And then the founder, Thomas Watson, of IBM dies. Well, Saturn transiting over the sun of the first trade chart and the incorporation chart, Saturn over the sun, in anybody's chart might be indicative of death of the father. And so that is when I first got it through my head that, well, traditional astrology would say that Saturn conjunct the sun is probably a low. And it appears to be. Now, the way to test that out would be, now that I have determined, and I'll perhaps do this in a future presentation, is just take a group of stocks. Let's see, we have Saturn in Sagittarius right now, so maybe we'll go to the previous sign, let's say Scorpio. And let's say, what would have happened if I bought a group of stocks, let's say 20, 30, that had their sun transited by Saturn? Let's see, that would be 5 years ago to up to about 2 years ago when Saturn was in Scorpio. What happened if I just bought them and held them? Now, based on the research here, you should get an above-average return because Saturn had depressed the share price. And by the way, just to throw in an extracurricular study I just did, if you'll notice, Twitter started trading with the Sun conjunct Saturn. So this gave me the idea. Perhaps that is bearish. And again, this study did not yield very much, as did most of these studies. For Twitter doesn't have 38 years worth of data, but my databases go back to 1980. And I did this study in 2017 in the first quarter. So that would be about 36, 37 years worth of data. If a first trade chart has the Sun conjunct Saturn, plus or minus 5 degrees, and there were about 80 to 90 stocks out of about 2,400 active trading U.S. stocks that had this. Those 90 stocks from 1980 and from 1990 don't show any different appreciation than the overall market, which is quite surprising and disappointing, but at least we know. And I started doing these studies in the 90s when I was in Abu Dhabi with a much lesser system that only had data going back 8 years. And I tried Jupiter conjunct the midheaven, Jupiter conjunct the Sun, Jupiter conjunct Uranus, Jupiter trine this, and it was quite time-consuming to do this. And I finally stopped because none of these portfolios showed any percentage return, buying and holding them, than did the index, which was the Standard & Poor's 500 or the NASDAQ 100. So I'm throwing that in there. I also, to throw out another one, I picked stocks that had Uranus conjunct the midheaven and the ascendant within, or the ascendant, obviously, can't be conjunct both, plus or minus 5 degrees. So conjunct an angle, plus or minus 5 degrees. And I did an analysis looking at the stability in the price stability index, which is computed by the Value Line Investment Survey, which is an index that runs from 5 to 100. So if the reading for the stock is 5, that means 95% of the 1,600 stocks covered by Value Line are more, this company is more volatile than 95%. It's a price stability index. So a low rating means low stability. In fact, a rating of 5 would mean that 95% of the stocks have greater price stability than the stock you're looking at. And when I was an analyst there, I was split. I had the trucking industry where the earnings predictability indexes were in the price stability, and earnings predictability was at 15 to 25, which means 85 to 75% of the stocks were more stable in terms of earnings and price. And I also had food stocks like Heinz and Campbell's Soup, which are really dull. If you ever want to pass out, just analyze those stocks. How can you mess up something that big and that basic? Their earnings predictability was up around 90-95%. 90-95. It means that the earnings are more predictable than 90 to 95% of all the stocks covered by Value Line, which is 16 to 1,700 stocks. And the price stability was also very high. It means they don't move very much. So again, Uranus conjunct an angle, the average was 55, which is right in the middle of the pack, which indicates that Uranus on an angle in a first trade chart does not make the stock more volatile than the average stock. So that type of analysis really hasn't yielded very much. And just in case, as you're working with AstroApp, you start thinking about it. If you do find something, I'd be interested to know about it. It might be because they are more complex pictures that you have to look for. Like if you put the pointer on the midheaven for Tesla, you get Venus, Jupiter, Pluto. And it has been a very strong price performer. If you look at Priceline, PCLN, you'll notice, I think it's a combination of Jupiter and Pluto to the midheaven. So it might be complicated planetary pictures are the keys to finding some aspect picture or planetary configuration that symbolize a stock that will consistently outperform the index which it is in. I have not found it yet. So this is the conclusion of this presentation. I hope to bring another one to you soon. Again, from Bill Meridian at Cycles Research and Jean Vicotan at AstroApp. Thank you very much for listening.